I would say that the Fed is expanding the money supply at 20% a year, and they're buying $120 billion worth of bonds, and the EU is buying $120 billion a month worth of bonds. So you've got all of the bonds in the world being bought by the central banks. So investors have been squeezed out of bonds. You can't buy bonds with any decent nominal yield. The real yield on bonds and cash is -15 to -20%. That's created a mad scramble for a store of value for all investors, and so they've all scrambled into ETFs. And first it was the Spider ETF, and then it was other ETFs. There's 2,500 ETFs. Equities have become the store of value, and that keeps pushing people out because they've lost confidence in conventional strategies and conventional money, conventional bonds, conventional treasury strategies. Because they've lost confidence and they've literally lost hope, they're being driven to speculate more. And the result is the GameStop saga. The result is the Archegos saga, where they put on huge leverage on equity. The result is the SPAC explosion, where people are literally buying speculative shell companies that do nothing but potentially do something that we don't know what, but they figure that's better than holding cash. They're being crowded into cryptos, and I think that the wise ones are buying Bitcoin because they understand that this is sound money for the next 100 years. But I also think that people are speculating in other cryptocurrencies, and it's not that different than the GameStop thing. You know, people are looking for something other than to wait and watch their money get debased. I think also, you know, it provides entertainment. People are getting entertainment from Robinhood. It's kind of fun. Dogecoin is fun, and if I take away the ability to go to a professional sporting event and gamble at the sporting event, then this is another way for me to gamble in the market. So I think ultimately it's good. It's understandable in the monetary environment. It's good for the crypto industry. It's generating massive awareness and massive enthusiasm. Lots of people are signing up. Lots of people are opening up accounts. I think there are 3 million people a week or more that are opening up accounts. I don't think that you're going to want to leave Dogecoin to your grandson or granddaughter. But on the other hand, I wouldn't begrudge you gambling on a boxing match or gambling on a basketball game if it were legal in the jurisdiction when you do it. I mean, what's the difference between that and buying a lottery ticket or just paying to go to the game, right? I mean, it costs money to do it. It costs $200 to go to a concert. And so if it's not allowed to go to the concert and I have the $200 and I'm bored on a Saturday night, what's my outlet? I think people are going to take a portion of their money and they're going to invest it in things they deem safe. And a safe savings account is like Bitcoin. And they're going to take a portion of their money and they're going to bet it on equity that might not be so safe. And they're going to take some of their money and they're going to gamble it on something which is just fun and a flyer. And sometimes they just do it to give the finger to somebody. And sometimes because out of frustration, what else are you going to do? If you want to, you don't really want to store your money for 100 years in silverware or something that's used as an industrial metal, or something that's gold and silver used as industrial metals. If you want to store your money for 100 years, you want to put it in a pure monetary asset which cannot be debased or inflated or manipulated. The thing that's special about Bitcoin is it's an asset plus a network plus a protocol. The asset is capped at 21 million and is only going to shrink. It can never go up. People can lose their Bitcoin, but they can't create any more. The network is an open network, which means I can move a block of $1 billion of Bitcoin from here to Tokyo in an hour for a few dollars. And that'll eventually be moving $10 billion and then $100 billion. So it's a very powerful final settlement network. If you wanted to move $1 billion of gold from New York to Tokyo, you're talking 3 months and $5 million. You can't. So gold is tragically centralized. There is no network. And then there's no protocol. The protocol of Bitcoin means PayPal can integrate 330 million mobile phones into an underlying Bitcoin network and keep them synchronized with integrity. You can withdraw your Bitcoin off the custodial exchange, and that means that the exchange can't go 100x naked short on the Bitcoin. If they do, there's no fractional banking, or it's fractional banking at your own peril in Bitcoin, because, you know, look, my company doesn't have 2.5 billion worth of Bitcoin. We have like 5.5 billion worth of Bitcoin. We can take it anywhere we want to any exchange in one day. So if you were to, and we got it in cold storage. So if I had $5.5 billion worth of Apple stock, then the bank could short it and lend it out to drive the price down. If I had $5.5 billion worth of gold, it'd be sitting in a bank, and other banks and bullion bankers will write derivative contracts against it and short it, and they're working against me. So the problem with gold is the gold miner, if you decide to invest money for 100 years in gold, the gold miner's your enemy. He's going to take 90% of the value by inflating the price of gold. The gold banker is your enemy. They're going to hypothecate it and dump derivatives. And then the government is your enemy. If gold gets too high, they're just going to sell their reserves or short it or seize it, because you can't, try leaving the country with $100 million of gold in your pockets, right?
Right.
It's not going to happen. So ultimately, this is why the gold standard failed in 1914, and why gold reserve standards, they just don't work. The reason that Bitcoin standard will work is because the custodial rights of 5 billion people are unprecedented. There's never been a property in the history of humanity that gave the people more custodial rights. If you have a $50 Android phone in Zimbabwe, you can walk around with $10,000 worth of Bitcoin in your pocket and nobody knows you have it. And even if I hold a gun to your head, if I shoot you, I'm still not getting it. If I firebomb your house, I'm not getting it. I can't take it away from you. And if you have 1 minute notice, you can zap it to the other end of the earth. So you can't do that with land. You can't do that with cattle. You can't do that with gold or silver. You can't do that with a stock or a bond or a piece of commercial real estate. You can't do it with a pile of cash. What's better, right? And the answer is nothing. And so if you want the Bitcoin standard to work where the gold standard failed, the key is the protocol and the network, because the network guarantees that anybody that holds substantial amounts of Bitcoin have custodial privileges, and they can move it between any jurisdiction and any custodian in order to avoid counterparty risk and avoid being victimized by the custodian or the province of custody. If New York wants to tax it, I can move it to Wyoming. If Wyoming wants to tax it, I can move it to Switzerland. If I don't trust the bank in Switzerland, I can move it to Singapore. And if I don't trust anybody, I can move it to my own phone. And if I don't trust my phone, I can memorize the seed phrase and put it in my head. You can't do that with anything else ever deemed property in the history of the human race. The thing that causes the asset to hold its value is the fact that the counterparty can't counterfeit it, hypothecate it, or seize it. That's what causes it to have value. That's why silver and gold don't hold their value. That's why these other fiat currencies don't hold their value. That's why Bitcoin is going up in value faster than any other asset. That's why it's the most sound property in the world.